Let's get to our traders. Tom Hayes, where are you seeing the biggest flows right now?
Well, I think the next big trade, Liz, is going to be banks. Okay, the last two times that we saw the yield curve steepen this quickly, the 2s and 10s, was 2003 and 2009, and it presaged a multi-year rally in banks. They're the laggards. They've moved up a lot off the bottom, but they've got a lot more to go. You've got the CCAR test results coming in a few weeks. Expectations are so low, they're going to be very easy to beat. You've got the PPP income that's going to show up in Q2 earnings of over $20 billion in the aggregate. And we're not going to have any negative rate policy. They learned from Europe, that's how you destroy banks. And in order to get the recovery going, we need credit flowing into the economy, and that's exactly what this Fed is doing. So we love banks here. And I remember I was on with you at the lows in March, and I said, Liz, do you think Wells Fargo is going to do 50% less loans next year than they did last year? The stock was down over 50% at that point. It's starting to rebound. U.S. Bank Corp we own as well. So we see that as the next big trade, the catch-up trade for sure.
Yeah, you know what? I'm glad you brought up negative rates because, I don't know, a couple of weeks ago, we were seeing signals out of the Fed funds futures trading pits that said that by February, we would see negative rates. Chris, we are not seeing that right now at all. We are actually seeing that for the next week's Federal Reserve meeting, there's just, I don't know, around a 7% chance that we would see any kind of move because rates are already at 0 to 0.25%. But we don't need that right now, do we?
No, we don't. I mean, if you look at the 10-year futures chart, it really shows you. We went down there, we flirted with it, we got to a yield of around 0.56, and now it looks like we're going to normalize. What does that mean? We'll come back to maybe 1 to 1.5%, and that's just what the technicals are showing if you look at the 10-year chart. So you got to remember back in 2018, we were above 3%, right? And everybody was worried about a 4% 10-year. So just goes to show you the market corrects very quickly. Sometimes it's mind-boggling how quickly it corrects. But certainly with today's number, you have an 11 million person swing from looking for 8 million unemployed to 2.5 million employed. Nobody saw that coming, and you saw it as it impacted the bond market today. So I don't think the negative rate idea has been put to rest. It's probably on the back burner. But if we can get through the next 150 days, which is how long we have to the next election, we may be able to put that negative rate idea to bed.
Scott Bauer, I don't want to throw any water on this, but we're in the business of reality. And if we're given the great part of the numbers, we got to give some worrisome data as well. The CBO, the Congressional Budget Office, said that 5 out of every 6 workers that received unemployment benefits under the CARES Act actually are getting more money, okay? They're getting more money than they would if they actually went back to their jobs, Scott. To me, you have to look deeper on this economy and say, everybody was saying it's so strong, it's so wonderful. How strong is the foundation? I mean, the scaffolding and the decor look really good, but the foundation is that 5 out of 6 people are getting more on unemployment than they do at their regular jobs. What does that say? And yet we have a very strong stock market.
Liz, you're absolutely right. And I am not a pessimist. I am not a glass half empty person. But that is the reality of what is going on. And as good as that jobs number was today, and what an upside surprise that is, to me, the more important number is going to be the continuing claims number, which kind of leads to what you were just talking about 5 out of every 6 people, potentially remaining unemployed. That continuing claims number, the latest one we got, was 21 million. It was above expectations. What that means is people that have filed for unemployment are not getting back to work yet. To me, that's what we really need to focus in on, because that is really going to be a sign of, is the economy getting back to where we were? Are things reopening? But most importantly, are businesses rehiring? Or have businesses found a way to hopefully survive? We all want every business out there to survive, but can they survive maybe by trimming back a little bit? So I think it is imperative to watch that number, to watch what you just said about what the CBO came out with, because that is a very, very disturbing statistic.
Yeah, I mean, listen, I'm all for a very, very stunning and wonderful and dynamic report and to report that. But folks, very important to note that there are a lot of you watching right now who are saying, I'm not feeling it right now. I don't have my job back. Tom, Scott, Chris, have a good weekend. And
Thanks.
regardless,
You as well.